Hello and welcome to Argus Battery Materials First Metal Movers podcast of the year 2023, which is set to be an interesting year for battery materials. And I'm here with Senior Battery Analyst Will Talbot and resident nickel expert Raghav Jain, and they're going to be talking about some of the interesting trends that we're going to see this year in the different battery metals. I'm Tom Kavanagh, editor of Argus Battery Materials, and I think what we should do is start with lithium, because what's happened in lithium over the holiday period since the start of the year has been a significant shift in the price narrative. We saw last year record prices in both lithium hydroxide and lithium carbonate, and now we've seen a significant drop off from that point. Will, what's happening here?
Hi, Tom. And just first off, thank you very much for having me again. In lithium prices that we've seen has been, I think, quite rapid, more rapid than we were expecting. I think from our end, at least, we've always been, well, I say always, for the past couple of months, we've been expecting that lithium would start to decline going into the first quarter of this year, mainly because of an expectation of new capacity coming online, and also perhaps because of some demand side disruptions to do with the Lunar New Year. But it's happened a bit earlier, and it's happened a bit swifter than I think we had expected. I think, again, this really kind of solidifies that a lot of the drivers of the very high levels that we saw in November and December were ultimately quite transient in nature. You know, the kind of supply chain disruptions that have obviously plagued China during lockdown, the converters going offline during some of the worst winter weather, all of those are fairly seasonal things. And I think as we go into the first quarter of this year, and particularly throughout the remainder of the year, we'll start to see those prices declining even further. I think it's important to note, however, that we probably won't see a return to the prices of, say, 2 or 3 years ago. I think lithium has really seen a step change in terms of the market dynamics, in terms of the supply and demand drivers. The shift towards electrification, in our view, permanent. And that will continue to support lithium well above, let's say, the kind of historical level of prices. But we do expect that lithium carbonate and lithium hydroxide prices coming out of China will go down, I think, sooner rather than later, and they should remain at a more reasonable level throughout the remainder of this year, as new mine capacity comes online, and also as new converter capacity within China expands.
And you've already started to see the impact on prices of some of that supply being baked into prices right now. I mean, we have lithium carbonate CIF China at $64 to $65, way off where it was back in November, where it was nearer to 80, and carbonate in China 475 to 505,000 yen per metric ton, and hydroxide at 490 to 515,000 per metric ton. Chinese yuan, and that's slightly higher than the carbonate price. I mean, hydroxide seems to be holding up relatively better than carbonate. I had a conversation with a trader who believes that the reason for that is because carbonate was sort of over speculated on last year as prices were going up, and it did reach higher than hydroxide at a certain point in the year. I mean, what projects can you point to this year that are coming online? I could probably mention a couple. We just saw Core Lithium deliver 15,000 tons of concentrate to China, their first shipment this year. We were also expecting a result on that Thacker Pass project in the US from the US court in that dispute between sort of Native American tribal lands and Lithium Americas Corporation. So we'd expect a result on that in the next couple of months. Are there any other important projects you could point to?
Yeah, so there's a couple of new sites that look to be coming online in Latin America. You've got the Catamarca site from Zijin, which is planned to come online this year. You've got the continued ramp up at La Negra. You mentioned the Finniss site, and I think you've also got expansions from the Marble joint venture. I don't know if you mentioned that. Those are the ones that spring to my mind. But of course, we're always tracking new projects that are coming online, and we're always very aware of any new feasibility studies that we see as adding capacity to our models.
Yeah, and I think it'll be interesting to watch that develop over the year, and whether those projects can supply China once it comes inevitably roaring back from the COVID disruption. Now I'd like to move on quickly to nickel. We ended the year with volatility in the nickel market, especially on the LME, and I think we may have begun the year in exactly the same vein. Is that right, Raghav?
Indeed, yes. Hello, Tom. Hello, Will. Thank you for having me on, first of all. Yes, well, the after effects of last year's short squeeze linger as far as the nickel market is concerned. I think most market participants agree that the true price of nickel is in the low 20,000s, so anywhere between 20 and 22,000 dollars per ton. That's the futures price. But obviously, what we've seen play out is nickel at 30k, 32k even. It's trending at around about $28,000 per ton at the moment. And since the short squeeze of last year, the LME has taken various steps to try and solve the problems, including closing the contract to Asian hours trading, because obviously the short squeeze situation emanated from Tsingshan in China. The over-the-counter trades, which obviously wasn't the case earlier. They've imposed price movement limits on the contract, so it doesn't jump around, but clearly none of them have worked. And the problem really is the underlying poor liquidity. Speculatives have left the market since the short squeeze. No one essentially wants to be caught short in this market, because you build up short positions and you end up in the kind of situation that Tsingshan found themselves in last year. That's what the market believes. So that's artificially inflating the price. I suppose an ancillary factor inflating the price is the tightness in class 1 nickel availability, but class 1's now the smaller part of the market. Stainless steel ingredients like nickel pig iron, for example, make up 50% of the market, but obviously they are detached from class 1's price. Demand resurgent from the battery sector, and that's bound to keep supporting prices this year as battery producers, EV producers hedge their medium-term risk. But short-term, near-term volatility is likely to continue.
And we talk about detachment in the nickel market. I think one of the trends that is interesting this year is what's happening in Indonesia and some of the projects that are coming online for nickel matte and MHP in that region. I mean, could that lead to further decoupling of the nickel market from the traditional pricing mechanisms?
Certainly, the way things stand, yes. MHP producers, for example, don't at the moment see an alternative to the LME because supply isn't vast and large enough. That's the common consensus. But as more and more MHP come into question and the use of the contract will come into question, yes, we expect the demand in batteries, for example, this year to rise by 34% on last year to roughly 650,000 tons. That's what some people forecast a little bit above this figure, some a little bit under this figure, but yeah, 650 KT is roughly where the market's going to be at. We've had a lot of MHP and nickel matte start to come online. We obviously started, with PT Halmahera Prasada Ligand and the Huayu Nickel and Cobalt project, both of which came online in 2021. This was followed by the ETQMB New Energy GEM's project that came online last year. We've had CNGR's massive nickel matte plant in Morowali, Indonesia, that came online late last year. More of the same, really. CNGR's got their Weda Bay project scheduled to come online this year. The big addition to the MHP market will be PT Huafei, who's scheduled to bring 120,000 tons of nickel in MHP online this year. And you've got a spate of others, Huayu and Tsingshan's PT Huake, who are producing about 45,000 tons of nickel in matte. Their plant in Weda Bay is scheduled to come online this year as well. So yes, there's a lot of it coming online. Last I checked, MHP was being priced at around about 70% of the LME nickel, but no one expressed satisfaction, or no one is expressing satisfaction with the way things are at the moment. The fact that supply is still thin, even though planned projects are surging, by sort of 2025, they reckon there'll be over 1 million tons of intermediate products coming online from Indonesia. So certainly that will be a time when they'll have to look for an alternative to the LME, I think, or indeed the LME will have to come up with a separate class 2 contract. Who knows? There's other players in the market. We did a story last week of a company called GCH based in London planning a new spot nickel index based on their internal trading platform that they're launching in the first quarter of this year. People are talking about the Chinese market moving to the Shanghai Futures Exchange as well to try and compensate for the decoupling. But yes, the LME as things stand cannot serve anyone's purpose except for maybe a small number of class 1 users, and an alternative is needed unless of course the LME resurrects the contract and things go back to normal there.
It'll be interesting to watch how that develops over the next year. I think that's all we've got time for really today. I'd love to get into the trends on some of the other battery metals, but maybe that's for a future podcast somewhere down the line. Thanks, Raghav. Thanks, Will, for coming. And Argus Battery Materials is now live. If you want to find out more, please visit www.argusmedia.com and look for the Battery Materials publication there. Tom Kavanagh, thanks very much, and we'll see you next time.
Thank you very much.
All right, thanks, guys.
Thanks a lot, guys.